You might not see it on the news yet, but something huge is happening in crypto. Tariffs are stuck in limbo, economic growth is slipping, and bond yields are stretching the system. Yet governments, mega funds, and public companies are grabbing and grappling for Bitcoin faster than miners can produce it. Then add in the fact that US buyers are paying a premium, and the fact we just got a fresh Bitcoin breakout against gold. If you combine all these things, you've got a recipe for a setup most people do not see coming. They don't understand the magnitude of what is happening. So let's get into it. Hit subscribe and let's get into the nitty-gritty, breaking down the evidence so you are ready before the rest of the crowd can connect the dots. So here we go. Picture this. The global economy like a giant game of tug-of-war. On one end, you've got governments tightening the rope, and on the other, markets searching for safety before the next pull. The first pull? Tariffs. Beijing's spokesperson just said point blank that China isn't even talking to Washington about rolling them back. That keeps the full tariff percentage hanging over hundreds of billions of dollars in trade, which means higher prices and more uncertainty for everyone. Second pull, gold buying. While the headlines focus on factories and shipping, China's central bank is quietly stacking gold, far more than it admits in its official reports. They added about 500 metric tons in a single month. When a country shifts reserves from dollars to gold, it's a clear sign that they want insurance against financial and geopolitical shocks. Third pull, bond yields. The interest rate on America's 10-year treasury keeps creeping up towards 5%. When that number gets too high, borrowing for homes, cars, and businesses gets tougher. And Wall Street starts whispering about the Fed stepping back to buy in bonds again. And the final pull is growth. The Atlanta's Fed real-time model now says the US economy could be shrinking at an annual pace of 2.5% this quarter. That's a big gap from the soft landing story you and I hear on the TV. And it raises the odds that the Fed will reach for the stimulus playbook, which I alluded to in past videos. They may reach for the stimulus playbook sooner than later. Put those 4 strands together on the different pull types: no tariff relief, record gold buying, rising borrowing costs, and slowing growth, and you get a market that's bracing for turbulence. In moments like this, big money usually hunts for the hardest asset it can reach for, and that sets the stage for why Bitcoin is suddenly back on every sovereign wealth fund's shopping list. While headlines debate tariffs and recession odds, the real action is happening in the deep end of the pool, where institutions quietly decide what to stash away before the storm breaks out. Sovereign wealth funds, the national saving accounts of oil states and export giants, well, they are joining the Bitcoin party too. Coinbase's head of institutional sales told CNBC that several of these funds have executed spot Bitcoin purchases in recent weeks, treating BTC or Bitcoin the same way they would treat gold, bars, or US treasuries. So that's right, guys. Governments are now direct owners on-chain and not via hedge fund proxies. So they are buying directly. This state-level demand landed the same week US spot ETFs pulled in. They raked in 917 million, roughly 10,000 BTC. That's nearly 3 weeks of post-halving miner supply. You can just try to imagine this. ETF creations work like a conveyor belt, like at the airport where it moves suitcases around, where authorized participants wire cash to the issuer and the issuer orders fresh BTC. And those coins disappear into cold storage, never to re-enter exchange order books unless holders want to redeem them or trade them, which so far they aren't. Drill down or zoom in and you'll see most of the flow funneled into one ETF. That was BlackRock's IBIT, now sitting on more than 580,000 Bitcoin. That pile is already larger than Tesla's total cash reserves and is marching towards Binance's flagship wallet. BlackRock has effectively become the third largest Bitcoin holder on Earth. And of course, it's no surprise because it's BlackRock, turning this Wall Street giant into a black hole for circulating supply. On-chain forensics confirm the ETF story too. We have Glassnode's heat map showing us the whale cohort with wallets holding over 10,000 coins at an accumulation score of 0.9, which is a near perfect binge that last disappeared in early 2020 before the 6x rally. Even mid-tier shark wallets are flipping from distribution to accumulation, showing clear institutional FOMO, or fear of missing out. Corporate treasurers don't want to be left behind. Cantor Fitzgerald just folded its bank check SPAC into a new Bitcoin holding company named 21, which is backed by Tether Cash, SoftBank Capital, and run by Lightning pioneer Jack Mallers. It's launching with 42,000 BTC and offers Fortune 500 CFOs a plug-and-play way to buy, custody, and even spend Bitcoin over Lightning. No plumbing required. And across the Pacific, we have Tokyo listed Metaplanet just adding 145 Bitcoin to its balance sheet as well. Financed with near zero rate yen loans. And we know they're effectively running the same strategy Michael Saylor is running at his company Strategy, where basically they borrow depreciating currency like the yen or the US dollar to hoard or to buy an appreciating asset like Bitcoin. The combined effect is visible on exchanges too. We have Fidelity now tracks reserves at a 7-year low, below 2.3 million BTC versus more than 3 million pre-COVID. Every new sovereign bid or ETF creation tightens that flow further, turning the market into a squeezed spring. Even Coinbase's CEO, Brian Armstrong, sees the writing on the wall. He told investors that if this pace holds, the US government and corporate stacks could one day rival the size of America's 8,100-ton gold hoard or holding of gold, reframing Bitcoin from a curiosity asset into a strategic reserve asset. Put it all together and the picture is quite clear. While new issuance has been cut in half, governments, asset management giants, whales, and corporations are all racing for the same shrinking pool of coins. The supply squeeze is unfolding block by block, and smart money is telling us what the next move is. And I would hope you see it, and I would hope you follow suit. The funny thing about markets is they leave little clues before the move suddenly happens. And right now, those clues are flashing bright green. The first clue, US buyers are paying extra. On Coinbase, Bitcoin is trading a few dollars above the global average price. And anytime people at home are willing to pay a premium, it means fresh cash is lining up faster than sellers can fill the orders. And this is usually the first spark of a rally. Second clue, Bitcoin is drifting away from tech stocks, which I covered in about 2 videos ago. For most of last year, Bitcoin's price moved almost side by side or in unison with the NASDAQ. Bitcoin is starting to act less like a risky tech bet and more like its own thing, its own asset, a safety net when headlines get scary. Third clue, Bitcoin is catching up to gold. Investors track a simple ratio, BTC price divided by gold price. And that line just broke through a ceiling it couldn't crack for nearly 2 years. When Bitcoin starts gaining on the oldest store value on the planet, It's a sign that money sees room for Bitcoin to play in the same league. Put those three clues together and the market is saying the next leg could be higher. And remember, supply is tighter than ever. People tend to forget there's only a limited supply of Bitcoin. So when rising demand meets a shrinking supply, prices skyrocket. That is the formula. And this is the formula unfolding before our very eyes right now. So if today's clues made you rethink where this market is heading or reconfirmed what you already knew, I would just ask you tap the like button because it does mean a lot to me. I track these metrics daily. And I just ask you share this with a friend or a family member that's still a little confused about what's going on in the market and is a little sidetracked by the price. So I love you guys very much and I will catch you guys in my video tomorrow. Take care.